Welcome to The Explainer. Today, we're unpacking a really bold, kind of contrarian take on the future of Bitcoin and the whole crypto market. It's an idea that says the real fireworks, yeah, they haven't even started yet.
So let's kick things off with this really provocative claim from market analyst Mike Alfred. He's basically arguing that what everyone thought was a bull market just wasn't. I mean, that's a statement that completely reframes the entire conversation we're having about crypto's recent performance. And, that immediately brings up a huge question, right? If the consensus view is totally wrong, then what in the world has really been happening? And maybe more importantly, what does this contrarian view actually mean for the future of the market?
All right, so here's the core of the whole argument. The idea is that the crypto market has actually been stuck in this long, drawn-out bear market. Not a cycle of booms and busts, but more of a multi-year rebasing, after the market just got way too ahead of itself. It's like it's been building a new foundation for a much, much bigger move.
And if you look at this timeline, it kind of paints the picture. Instead of a sustained bull run, the last few years have really just been these isolated pockets of success. I mean, 2022 was just decimated by those Fed rate hikes. Then, sure, we saw some good years for specific players like the miners or MicroStrategy, but the broader market, assets like Solana and even Ethereum, they were facing stagnation, even big drawdowns. It just wasn't that rising tide lifting all boats scenario at all.
Okay, so if it wasn't a real bull market, what was holding it back? Well, this analysis points to two really dominant macroeconomic forces that were pretty much working directly against crypto. And wow, this really illustrates the dynamic perfectly. On one side, you had the crypto market basically starved for capital, right? Thanks to the Fed's super restrictive policies. But at the exact same time, you had the AI boom, which some people are calling the biggest capital expenditure cycle in human history, just humming along, powered by the massive cash flows of big tech. AI essentially became this giant financial vortex, sucking all the available liquidity, all the speculative oxygen, right out of the room. But here's the twist. The argument now is that those very conditions that held the crypto market down, well, they're starting to change, and that could be setting the stage for a really powerful news cycle. So how would this happen? Well, it's a chain of events, and it starts with a potential shift in economic policy. An effort to juice the economy with lower interest rates. And that, in turn, could reignite what they call the animal spirits of investors, getting them to spend and take on more risk again. As that happens, capital starts flowing back into more speculative assets, and, well, eventually that liquidity finds its way into crypto, and bam, that ignites the next major run. But wait, what about that giant AI capital vortex we were just talking about? Well, in the long run, this historic investment in AI is expected to create just enormous economic growth. And that growth, it generates new wealth and liquidity that's eventually got to spill over into other innovative sectors. And crypto is like a prime candidate for that. So, okay, if this whole macro liquidity cycle is the main driver, it kind of throws another popular narrative into question: regulation. I mean, while so many people in the crypto world are laser focused on new laws as the ultimate catalyst, this analysis suggests it might just be a sideshow to the main event. You hear it all the time, right? There's this persistent narrative that the one thing holding crypto back is a lack of regulatory clarity. The belief is that as soon as new laws are passed, all this institutional money is going to flood in and kick off the next bull market. But this perspective, it challenges that idea head on. If you look back, Bitcoin's major moves have historically been driven by fundamental economic cycles and liquidity flows, not by some new piece of legislation. I mean, come on, Bitcoin has gone completely parabolic in the past under all sorts of regulatory environments without specific new laws being passed to make it happen. And this all brings us to Bitcoin's really unique economic design, this core property that creates what could be a massively asymmetric opportunity when that liquidity finally comes flooding back. The key concept here, and it's a big one, is inelastic supply. So unlike pretty much every other commodity or asset on the planet, when demand for Bitcoin surges, the market can't just, create more to meet that demand. The supply schedule is hard-coded right into the protocol. It is completely 100% unresponsive to price. Just look at the comparison with something like silver. When silver prices shoot up, it incentivizes miners to go out and produce more of it, which eventually pushes the price back down. You've probably heard the saying, the best cure for high silver prices is high silver prices.
Well, with Bitcoin, that feedback loop just doesn't exist. The issuance of new coins is cut in half every 4 years, and it doesn't care one bit how many people want to buy it.
So what happens when you get this collision of potentially surging demand from a new liquidity cycle with a perfectly fixed supply? Well, you get some pretty dramatic upside potential. This analysis actually sees a path for Bitcoin to reach a range of $300,000 to $500,000 in the next cycle.
You know, this long period of just stagnation has created a lot of doubt and, frankly, a lot of boredom in the market. A lot of people have just given up. And according to this view, that is the perfect environment for a move that could catch almost everyone completely off guard. It's a reminder that true, programmable scarcity is an incredibly powerful force.
So, to wrap it all up, we have this argument that the last 4 years were basically a bear market in disguise, held down by huge macro forces that might now be reversing. You combine that with Bitcoin's unchangeable economics, and the stage could be set for a truly dramatic surprise. It really leaves you wondering, is the quiet market we've all gotten used to just the calm before the storm?
Thanks for watching. If this helped you, please like the video, subscribe to the channel, and tap the bell to get notified when we post new ones.